story. We're watching oil prices and spiking in the middle of the session on heightened tensions in the Middle East, and prices were up on the day. But overall, we know it's been down week for crude. For more, we're bringing in Andy Lipow, president of Lipow Oil Associates. Andy, it is good to see you. And kind of talk through these cross currents. On the one hand, red hot geopolitical headlines. Israel carries out a big strike in Lebanon, reportedly targeting Hezbollah's leader. On the other hand, we have this, the bearish effect here. Reports that Saudi Arabia committed to higher production. How are you trying to think through these cross currents and trends, Andy?
Well, good afternoon, and thanks for having me. As far as Israel and with its conflict with Hezbollah, what we've seen actually since Hamas invaded Israel nearly a year ago is there's been no oil supply disruption due to these geopolitical tensions in the Middle East. In fact, the oil market really doesn't think that we're going to have an oil supply disruption, because for that to take place, what you really need is Iran to get into a direct conflict with Israel that impacts shipping through the Strait of Hormuz. So from that standpoint, the oil market hasn't reacted to the upside. Here recently, the Financial Times issued a story saying that Saudi Arabia had abandoned a $100 per barrel target price. While Saudi Arabia has never explicitly said that they've had a target price of $100, what we do know is they need higher prices, as does the rest of OPEC Plus, in order to support their domestic spending budgets. And it's my opinion that OPEC Plus, including Saudi Arabia, does not want to get involved in a market share price war with the rest of the world. In fact, what we've seen over the years is U.S. oil production is now at an all-time record high.
And Andy, it's Julie here. Getting back to the the sort of geopolitical side of the equation and the activity that we're seeing in Lebanon and Israel, you said the market is sort of not, that it's not going to be disruptive to supply at this point. What would change that view? Would it be Iran, for example, getting more explicitly involved? What should investors who are watching that oil price, what should they be paying attention to?
Well, Julie, I think that's exactly right. If we see Iran and Israel face off directly, then the oil market is going to be at attention, worrying about what might happen supply-wise in the Straits. I don't think it's in Iran's best interest to go to war with Israel, nor I don't think it's in Israel's best interest to go to war with Iran. But I think that the probability of the Strait actually closing is pretty small. We've seen over the decades worries about it closing, but you have Iran, Kuwait, Iraq, and Saudi Arabia all dependent on that strait being open in order to monetize their oil reserves.